Welcome in, Paramay Trades here. This is Paramay Trades Journal, and we're going to take a quick look at crude oil towards the end of the week. Probably something we should have done at the earlier part of the week or at market open to see, what crude oil was doing. So three components. Just on the quick checklist of things to do here is to check the commitment of traders report, something that we use as a leading indicator to find ourselves on the right side of the trade and find market sentiment and things like that. And we'll look at some critical pivots and some price action. We all know what's been going on in the energy market presently with the economy's suffering and this whole virus business. So now, I generally don't do crude oil. Something had piqued my interest, and we'll get to that later. And it was just an article on bar charts that I'm just not too fond of, and I felt the need to respond to because we use the commitment of traders report as a way to see where big money is placing their bets here. It should go without saying that dropping down from 64 to $18 a barrel or something like that should automatically pique your interest. Can it go lower? Yeah, maybe, but we're going to get to this in a second, but we're just going to take a look at two charts that I like to look at. One is the commitment of traders, and the other one is just price channels and things like that. Look at some pivots. So looking at crude here, just from a standpoint of commitment of traders, what do we have here? Back in January, breaking into this very bearish territory, and we're going to show this on a chart because this report is coupled into my thinkorswim platform. We do have an indicator for this, so it's nice to get the visualization on a chart. If you're a numbers guy and you like looking at reports, I like to start here and then look at the visual representation on a chart, which is really nice. It's really nice to be able to couple this with price action and see, okay, does this report function? Does it have, any notable areas or notable points at which we can match up the commitment of traders, commercial interest particularly, and what's going on with price action in the chart? So extremely bearish territory back here in the January time period, or December into January. So that's like a 6-week period. So then we're in this middle ground territory, and we're just brushing up against extremes on the 6-month, and then they break up quite a bit more and break into that extremely positive outlook in this territory. Probably mostly because price has been dropping so rapidly that it just looks really appealing. So now here we are in this middle ground. But 4 weeks ago, they were set on at least some of the commitment traders here, commercial interests were set on a very positive outlook. So here we now are at the current time period. In the last 2 weeks, we're just below this extremely positive outlook near the $20 mark on crude oil. So what does this look like on a chart, and what can we derive from this? And I've taken particular interest in this because of, I wouldn't call it an attack, but a discredit to anybody who uses commercial interests as a leading indicator. So if you're going to discredit this methodology, you're going to have to at least provide some kind of, some facts, some reasoning, and some analytics to back it up. And that's what we do in this channel is if we're using commercial interests, we'd like to back it up with analysis. I'm not hell-bent on commercial interest as a leading indicator. I think it's an amazing leading indicator, and you'd be missing some real opportunities if you're not following where big money is going with this. Because quite personally, me, as a speculator and a trader, I'm not moving this chart with a single contract. And I don't know that you think that you are moving this. If you're a retail trader, you're moving this chart, because I'm not. on that. But I would like to follow, the larger money pools to see where, they're placing their bets here. So just looking at this chart. Can we make a case that commercial interest really looks like they want to be on the right side of the trade here? Are any of these a good indicator of market sentiment? So here's a couple of key points of interest, right? So we use the 20% range on the 6-month and the 3-year indicator, or index rather, to let us know, or to at least follow what commercial interest is doing. So this was back here at the end of December and into the new year. Commercial interest is breaking into extremely negative territory for the weeks that we had highlighted, which was I think about 3 or 4 weeks. So we've got 1, 2, 3, 4 weeks, 5 weeks in extremely bearish territory, or a negative outlook. You don't even have to call it bearish outlook. You can call it negative, a negative outlook. So back here is when we first broke into these extremes, and no big surprise here that as we get closer to the top of this value high range, they're not as optimistic about holding net long positions. So they're tapering off quite handsomely on the 6-month index. So the 3-year index is in blue here, and the purple is the 6-month index. So 6-month index a little bit more responsive for us swing traders or intraday traders, and this is something that I pay attention to quite a bit. So one thing that we do like to see, or we think that the commercial interest likes to see, is a combination of factors. And market sentiment is one of 4 indicators that we use, but don't hold a lot of weight with market sentiment. But these things, these three indicators, when these line up in this fashion, comms holding a negative outlook, open interest is relatively high, WPR is in the oversold range, are we potentially looking at some price action or market sentiment change? I would say so, at least in this case. So holding net short at the top of this, where commitment of traders is wrong. And let's just make this like a line that looks more like a point of control. Okay, so very negative outlook towards the top in this value high area. Comms are bearish. Negative outlook. Open interest is high. WPR up in that overbought territory. Sometimes I think I say oversold and I mean overbought. Overbought, oversold. And I don't like the terminology. I like to use overextended. Maybe bulls are exhausted here, and now this is an opportunistic area for bears to take control of this chart. So just lining up these 3 indicators, even these 4 indicators of market sentiment is, on the rise or relatively high. And in a 1-year period, these are the 2 areas of market sentiment that were the highest. Market sentiment high, or very high right here. Very, very high. Think short. When market sentiment is this high, think short. WPR up in the overbought territory. We've got open interest, relatively high. There's a lot of people with open contracts, right? And on the 3-year indexes, we don't have the 6-month that goes back that far, but with the 1-year data that we do have, on this chart, this is one of 2 points that commercial interest shows that they're at relative lows. So here's your 50 line, and now they're below that on the 3-year index. So 3 index a little bit harder to move the numbers because there's a lot more data there. Not as responsive as the 6-month index, as you can see. But on a 1-year outlook, your relative high is around 73. Your relative low for commercial interest is around 35. So these 2 points of interest would indicate, at least on a 3-year index, that commercial interest is not very optimistic about price at these levels. So did we get any kind of notable price action from, this is up around 70 or something like that? I can't see because I've got this this chart. We'll just hide it. Let's just hide it real quick, okay? Or we can do that. We'll just change our time period to get a little bit more data here. And it'll make it a little easier to see. So commercial interest not as optimistic after this run up. So I wish we had the data looking back here to see if they had broken into really positive territory. And maybe that's something to look into, is to try to extend the amount of commercial interest data that we work with. There's 1 or 2 reasons why I don't put that much data on here. 1, it may slow down TOS a little bit. I mean, probably not that much, but and 2, I'm usually not looking back that far. So not holding a very positive outlook after this move up. And you can see the correlation here, right? 1 up, 1 down. As price trails, its price action moves up, they're not as optimistic. So 6-month index here, commercials are getting very interested in crude oil at this point in time. So they're setting a new high at 100. So here's our first indication, and this data comes a little bit late, but we had 1, 2, 3, 4, 5 weeks to enact or to take particular interest in, okay, so what are commercials doing? Is this a good idea to get aligned with this side of the trade? So again, at the sake of repeating myself, what is it that we like about this type of setup using commercials as a leading indicator? When comms are bullish, open interest is relatively low, and WPR is in an overextended or oversold range, we have a bullish case. Was this a bullish case? Yes, it looked like it. Could we have aligned ourselves on the proper side of the trade here? And the answer is yes. Could we have aligned ourselves back here with the proper side of the trade? The answer is yes. Or the profitable side of the trade? The answer is yes. Again in here, could we have aligned ourselves with the right side of the trade? Just using commercial interest? And the answer is yes. Comms are bearish. Open interest is relatively high. We are in overbought territory. And it looks like market sentiment is peaking out here. So in a 1.5-year period, with market sentiment as high and is peaking nearly as high as it is, when market sentiment is up this high, you have to think short. When it's this low, you have to think rally. 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 Short. Short. So is this possibly a market bottom? Look at how far down market sentiment is. This is about as low as it's been in the last 2 years. What happened the last time market sentiment was this low? Very opportunistic time to be a buyer. Is this potentially a market bottom? I don't think you can go wrong if you call this a market bottom. I don't care what journalist or advisor says that this is a market bottom. Is it a market bottom? I mean, you got a pretty good chance of calling a market bottom here at $20 if you wanted to. And I don't know, whatever. Is it? Does it look like accumulation? I mean, it does, but we would like to see something from this chart. So if we're using this, this trend line here as a point of control, lo and behold, we kind of bump into this. So is this an accumulating pattern? What I would definitely like to see It's some kind of swing pattern that would indicate that this is. So we need a higher low here. We can't push lower than this 19 to call this a market bottom. Open interest is blazing right now, though. I think it's higher than it's ever been in the last 1.5 periods. Here's your open interest relative high, blazing right now. Is this a prime indicator that well, yeah, this is a market bottom, that net long contracts are being gobbled up and this thing's going to go the other way? Is it ready to go the other way? Has it bounced yet? We haven't seen a really significant bounce, I don't think. We saw one here, 27 back up to 36, $10 bounce off this. I'll call this pivot high, right? This is a low value area. If you want to call it a market bottom, go ahead. You might as well. But what indications did we have previously that the market was going to turn around after a rapid sell-off? We get a higher low, low, and a higher low. This did not push lower in this area. So this looked like a bottoming pattern. Whoop, and back up. Couple that with other indicators, low market sentiment, and this was a good recipe for some price action to the upside. So at current price action, we're just hanging out in this area of our sellers getting exhausted. Are we overextended, tremendously to the downside? And are we going to get a bounce? We got a little bit of a bounce going on today. Where are our commercial interests right now? We're about middle ground. So we're going to get some data tomorrow to see if it supports or denies our outlook here. We would love to see this, start to rise. But being in this area is not at extreme lows. So did they think that the market's going to go lower? And I would say probably not. And we can do something real quick just to take a peek. I like to draw on these to get a better idea of what's going on. It's a little harder to do with regular tools on your platform. But we've got 1, 2, 3, 4, 5, 6. How many weeks? Back in January into middle of March. Well, they're starting to change their tune. Why are they starting to change their tune? Well, doesn't this look a little bit more appetizing with the tremendous sell-off that's been happening? So we're about middle ground. We're not at extremes. We're not at extremes to the downside. We're not at extremes to the upside, be it the 6-month index or the 3-year index. But when we were at extremes, we did see some price movement. When we saw extreme positive outlooks, so when it started to taper off and get into extreme negative territory, and we start to peak, it was that a leading indicator that the market could we have gotten ahead of this thing by following commercial interest? And I think the answer is yes. So I wanted to bring in an article real quick because I just don't like this type of. And I'm really sorry, Peter, to have to do this, but I really just don't see where this article helps anybody by stating that the reason why the crude market has bottomed is because your inner group said so. We do something that you don't do. And then there's this very random and displaced, not very cleverly disguised jab at Commitment of Traders report to show you, the public, their ace card. Why would they want to do that? Well, Peter, there's one of two reasons why commercial interests would want to show you their ace card. Number one, it's regulation law by the CFTC. And two, they like money. Right, so this not a very well written article to say that the market has bottomed because something that my mentor said to me, or because we do something that you don't do, and there's just no real explanation here. There's just no facts. And to call a bottom at 20, yeah, maybe it has bottomed, but you haven't given us anything. You haven't given the readers anything or sort of reason why crude oil is bottomed, other than discrediting other techniques and methodology, saying that you're part of an inner group and we do something that you don't. I think this is just poorly written. And if it was a market bottom, do something more than loading up an EMA ribbon with a larger moving average and then drawing one line and saying, yeah, this is a market bottom. Why wasn't the market bottom down here? Why is your market bottom in here? In this small valued range? Because there's less violence? Well, you had a small range to trade in here. Why wasn't the market bottom? Why wouldn't you consider this market bottom here? Well, we did not have a healthy swing pivot, that's for sure. But to discredit another methodology, this is kind of like wildly in the middle of nowhere and quite detached from the rest of the article too. This is just poor journalism, folks. And you've got to learn how to write better, Peter. You really do. And you got to give us some data, because we're looking at the data right here. And on multiple occasions, commercial interest has showed us their ace card. So let's break this down into a lower time frame and take a look at crude and see what we see. Let's see what we see. So 15-minute chart, not going to help us out too much. What can we do on this? Oh wow, we'll look at that today. We said, crude, if you're bottoming, show us something. Show us that we've got a market bottom here. It's a nice low value range. We got this nice pivot here, working at the 20 area. But this looks like more of a telltale sign and more of an indication of a market bottom, because we're following price action. And we're presenting an argument versus discrediting somebody else's, which is something that we do not do here. We do not discredit other sources of information to make ourselves look better. So that in itself is quite skeptical. I won't say skeptical, I would say, there's another word I want to use, and it's right at the tip of my tongue, and I just can't think of it. I'll think of it in a second. So, nice look, it's a small range within a larger range of information and data. So we draw this downtrend line here, or this downtrend channel to work with, and see if it presents any type of arguments for us, or potential for, or cues that the market bottom is in for crude. Do we have a nice point of control or median line to work with? Is there a fair amount of data that's pushing away from this area or finding support on this in this area? And then we've got in this area, this is our 0 point, right? This is our zero coefficient. So we need to get a couple of data points to work with, and after the sell-off, you try to find something as quick as you possibly can. So we've got 2 data points, and I believe we use this as a 3rd data point, right? Low to high, to our potential point of control area. So we got our first 2 points for point of control, and then we use this as the outer channel. So we had a head start. We only had this amount of data to work with on the downtrend channel. But we seem to be able to find a validating point of control area where data, is trading around to say, yeah, this looks like a good downtrend channel to work with. If you are a buyer on the lower end of the 1.0 coefficient and the 1.25, this looked pretty opportunistic for buyers because we're overextended, to the downside. So it's an area to watch. And that's a nice candle. That is a pretty nice candle with a tail happening. And it's a lot better than anything else that we've gotten on this chart up until this point. So we're above the point of control, and in this area, let's zoom in. Let's zoom in so that these can look a little bit clearer in our understanding in this analysis. So we had a nice tail here on the 1.0. We got a really good tail here up against this value low area that was trading in previously. Above the point of control, probably a good opportunity for bears to take hold. And I think this candle was one of the first indicators that there's a lot of bearish pressure up in here. Well, was there a lot of bearish pressure? Yeah, it looks pretty obvious, right? So maybe we've got some trap positions up in here, or and people, when folks are getting open interest is getting a little bit nervous. But up over the the median line, the mean here, your point of control area, and 2 indicators that this bounce was. It might be a good time to get into a short position here, because nothing really stated that this was going to break higher. So let's clean this up. Do we have a case for a swing pivot in this area that would say that we were going to go much higher? So we don't really have. What do we have over here that would work for us other than this pivot? I just don't see this high or low as being helpful in determining that this was in fact your market bottom. It's just it didn't look like it. It didn't look like we had something working over here. So now we're a lot of the price activity is happening above the point of control area. And this is nothing new. Laurencio Demir, amazing book on price action breakdown, would say, well, there's, we're getting a little bit of a shift, because most of the trading is happening on the higher end of the point of control. So then we develop a little bit of sideways trading for probably just about a week. But more importantly, the trading activity is starting to get back up towards the 0 coefficient, which is this outer bounds. So we're going to start challenging this, I think, lately. And then we get an amazing spike here. This is an amazing candle. And where do we find a little bit of selling pressure is back in that same range where we had found it before. Where this, tail, this candle tail is giving us a pretty good indication that there's still some selling pressure happening up in this area. Now we are looking at a downtrend channel that's starting to get challenged, and it's starting to give us an indication that this potentially could be a market bottom. We could potentially getting a change in sentiment or a change in direction. So this is a pretty aggressive move by bulls. This is an extremely aggressive move by bulls. Found support on the value high of this range. Bulls stuck off with it. I mean, could you have expected that? That kind of pump? I have no idea. If you're watching the chart, I mean, I just don't know that you guess if you got yourself into a long position down here and you said, well, this looks like a pretty good higher low swing pivot going. Higher low here. Would you have taken this as an indicator that you would like to get into the trade? So can we make that case that we've got, you know, a nice actionable swing pivot going on down here, a nice almost tweezer bottom, and this just doesn't. We swing low from high to low. We do not push lower. We do not push past this pivot. So the market is not. And this is a nice. Did we get a nice technical test that would have just been like, oh yeah, this is definitely something you want to take action on. What I like to do is just break down about a mid-range. Break this down into, you know, a midpoint or halfway point in this, you know, value low type area. So we swing low, we find a little bit of support, and we break that low and swing higher. So, you know, I'd take this first pivot as the value area low and the value area high. So this is a little bit of, you know, excess trading, but look where it is too. Here's our downtrend point of control. Is that our down? Yeah. Here's our downtrend point of control, and we're finding support here. This move, I mean, this, I would think that this move right here would indicate that you know, bulls might start taking advantage or start taking control of this as we're trading in the higher half of this larger downtrend point of control line. So we got a nice, you know, internal point of control to work with too, and it looks like it. So, you know, a lot of trading happening above this line may indicate a little bit of strength, and then we break down into a more appetizing area above the larger point of control, and we find support here. So we're below this, you know, this mid-range of this value box here, this range of trading, and then once we break above it and find support on it, and then again here at the higher value range of this smaller trading range. Could you have expected, you know, this type of breakout? I don't know really what caused this yesterday, but so now we're trading. Now we're trading at the 1.2 or the negative 0.25 coefficient, negative 0.25 coefficient. So this area should be an indication. If we can stay, you know, within this bounds and finally break out of this. Because it looks like we have already broken this downtrend channel. Can they maintain it though? Let's look at some fundamentals and see what's going on, but it's quite possible. Quite possible that we found some kind of market bottom on crude. And I'm gonna say that not because I want to. I'm saying that without discrediting anybody else, just by looking at the chart. And there's no reason to discredit another methodology or another approach just because you want to make yourself look better. Just pay attention to the chart. I'm not going to tell you everything you want to know. Did we get there first? It doesn't matter. It doesn't matter. It really doesn't. But here you are with commercial interest, something that we do use. Something we do use, we do follow, we do pay attention to. It's not the only tool in our arsenal, but we love to use it. Anyways, this is long-winded, 35 minutes. We came, we said well, we needed to stay here. Yeah, so there should be a lot of trading happening around this point of control area. If crude's going to break, it's going to show us. It's definitely going to show us. And this might be one of the best indications that, with the aggressiveness. Does it mean that it can't go lower just because we got a really strong bullish candle here? No, it doesn't mean we can't go lower. Well, this is a nice strong bullish move, right? Here's a nice initiation, and bears responded. So we'll see how bears respond and what happens with the market moving forward. But we have some potential here for a break. We know that the chart is definitely indicating to us that there is a lot of buying pressure happening down here. So can we get some movement? Oh, look at that, right? Bulls are feeling a little froggy. Maybe they want to go up and attack, these areas. So let's work with what do we got to work with? Value high, value low. So here we are, value that's just extremely high. And this is what we got to work with. We want to break this downtrend. We really need to stay within, I think, the confines of these prices. Get some accumulation, and watch your patterning. But bulls are getting really aggressive tonight. We should be into pretty close to the London Open here. So, anyways, that's what I got to say about crude. We've got a Discord channel listed in the description, so if you want to stop in and talk charts and talk COT reports, yeah, come on in. More the merrier. Hope you find yourself on the profitable side of the trade, and we'll see you again on the next video.